हेलो एवरीवन। वेलकम टू माय चैनल विजडम ऑफ भनिया। आज हमारे पास टॉपिक है पर्सनल फाइनेंस वन ऑन वन। दिस इज वेरी ब्रॉड टॉपिक। ये टॉपिक पे काफ़ी समय से मैं कोशिश कर रहा था एक वीडियो बनाने की, बट क्योंकि समय नहीं मिल पा रहा था, इसके लिए कुछ बन नहीं पा रहा था। बट टुडे फाइनली आई फाउंड दैट टाइम, सो दिस इज द टॉपिक आई वाज सो मच ड्रीमिंग अबाउट टू मेक, personal finance pay. And this topic covers entire bit of it. So personal finance is not just about the investment or a savings or a loan or something else. It includes every bit of it. Start from your budgeting to your expenses to your retirement to your investment to your savings to your how do you can manage your debt, um, every bit of it. And also it covers a bit of like tracking and making sure that you are on track. Okay, so this is an overall lesson, would be a longer video compared to rest of my videos in the channel, so stick to it. um, all of you who are thinking like why personal finance, what personal finance is important, so I'll tell you guys. In my corporate life I take tons of interview, and and the profile for which mostly I interview is basically requires 3 to 4 years experience. So it's not something I interview freshers. Okay. So the fun fact is that out of 100 people, if I interview between the age of like say 23 to 28, almost 90% people don't have any investments with them. Though they have worked, they have been working from 4 5 years, 3 4 years, but they so far I haven't started investing, not even a single rupee. While SEBI talks lots about investment, the government talks lots about investment, MP makes lots of promotion, mutual fund sahi and all that, but still, the large majority of people they don't realize how investment can make a difference if started early. Okay, so that's a topic. I mean, that's all the experience I want to bring in to the table today. Okay, so stay tuned to it. Yeah, keep some notepad handy because in this topic I'll cover some important aspects of the personal finance, which you may find it worthy to keep a note of, and maybe you can use it in your managing your finance. Okay, so I'll straight away get to the topic. The first slide. This is what all we are covering today. So all those who are interested, any bit of it, they can directly skip to that part, and those who are interested in knowing it full, they have to stick to it. So budgeting we'll look at first. Budgeting, when I say like how you can budget your life, out of total your salary, how much you can put it for your different component factors. Okay. We will also look at the rule of 50, 30, and 20 when we look at budgeting. Saving and investment, the follow-up part of budgeting. What in saving we look at the emergency fund corpus, and investment we look at different sort of investment options available in a very um, brief way. Okay, debt management, like how you can reduce your liabilities if you have any, or what not to do. Okay, to get into a debt trap. Retirement planning will touch base on the retirement planning aspects and what all options are available. We'll also look at the insurance bit of it, and finally, I'll conclude on by giving you some tips on how you can track your the overall personal finance and what you can do it best to ensure that the learning goes on. Okay, so that's broadly what we will touch base today. First thing first, introduction. So, personal finance is an important aspect of any family, any couple, any individual. Okay. If you do this, probably it will help you in organizing, monitoring, and controlling your personal and family finances. Okay. So, if you're able to manage your money well, obviously you can achieve mostly most of your short term and long term goals without much of a hiccups, and it will also reduce the financial stress. So see, when certain things doesn't go according to our plan, it gives us a stress. But if you know what you are doing, if you have planned your stuff accordingly, that will reduce a bit of it. Okay. So we'll get into more details. So first thing, budgeting. So budgeting, basically what do you mean by budgeting? So budgeting, if I talk about a very simple example, when someone have to get married, their family, they themselves plan for the whole event, right? Start from the clothes to jewelries to catering to the venue to everything, right? That's a budget they have to put in place. They have to put like maybe 20 lakh rupees I have to spend in the wedding, and this is how I can manage my funds. Right? A normal family and any family will do that. Maybe they'll keep 5 lakh rupees for jewelry, maybe 5 lakh rupees for venue and catering, another 2 lakh rupees for clothes stuff, another stuff, and then rest of the money goes for rest of the things. So that's a basic meaning of that's basic what is budgeting all about, right? For example, if you have to plan your birthday party, then you have to also do a budget. Right? Like you have to decide how many guests you want to call, what gifts you want to give them, whether you want to have a party at home or outside. So looking at multiple factors, you plan your party and your stuff, and then you give weightage, you give amount, you allocate money to each and every component of it. So that is what we mean by budgeting. Similarly, in the life also, though maximum people will do these kind of budgeting, but the vice versa of that, the same number of people don't do any budgeting in their life, and that's very critical. So budgeting helps us to what? It has three layers of it. So first we identify what is your total source of income. So without knowing the total source of income, obviously you cannot do a budgeting. You need to know how much is your incoming, how much money do you receive on month basis, yearly basis, like whatever the budgeting you are doing according to the time horizon. You need to gauge how much is your total income. Okay. Usually we do it on a monthly basis. But then you have to also define how much of money you want to spend. Okay. So, for example, a normal common family, Indian middle class family, let's say they have a total income of rupees 1 lakh in a month. Okay. And that 1 lakh rupees, then they have to define, okay, the 10,000 rupees I have to use it to for a grocery and the household stuff. Another 20,000, maybe a home loan EMI or a rent, whatever it is. That is what you will end up paying. Maybe 5,000 rupees for school fees, education, another 2,000 rupees for electricity bill, another 10,000 rupees for medical, miscellaneous, entertainment, all that stuff. So that's how you plan. Another 10,000 could be for investment, something like that. So that's the second step of it. And then you give a prioritization. Like what is the first priority for you? What is that the need? What is the want? And what is that you desire for? Okay. That also brings up to a next in this segment itself, the next logic. What is need, wants, and savings? So this is a general rule of the entire budgeting. Okay. That whatever money you receive, out of that, not more than 50% you should be spending on your needs. So when I say needs, are basically the expenses which are must to do. Like for example, if you're staying in a house, if that house is on rent, the rent is a must to pay. You cannot miss on paying the rent. Okay, there's no option for you. Similarly, food is a must to have. Basic school education fee is a must to have. Um, then groceries, then your electricity bill, then your light, then your water bill. So all these expenses are must to have. You cannot survive without these expenses. Okay. So these are your needs. These are the basic needs, your transportation, your petrol. All these are basic needs. These needs are very, very bare minimum for you to survive. So person in an ideal world, not more than 50% of your income you should be spending on your needs. Okay. That's the first thing. Second, it wants stuff which you don't need it to survive, but you may want it. For example, you may want to go out for a dinner, maybe once in a week. Maybe you want to go out for a movie once in a fortnight. I'm just giving you timelines. That's a normal. Maybe you want to go out once in a 6 months, some vacation. So these are all not the stuff which you needed to survive, but these are like something you want. Okay. So make it a maybe to keep it a happy life. Okay. So these are your wants. So rule says that 50% you are spending on your needs, and for wants you should not be spending more than 30% of your annual income or your monthly income, whatever. So that brings us to 50, 30. That's what we left with 20%. Minimum to minimum, any family should try to invest that 20% of your savings, of your income, into some sort of savings or investment. Okay. That's a must to have because 80% money you're already spending. 50% money you are spending on things which you cannot live without. 30% on the wants, which definitely you would like to have it. Obviously, after earning a bit, you don't want to just live to hand to mouth, right? You need to also do something to keep yourself motivated, to keep your family happy, to keep your wife happy, to keep your children happy, right? So all that is all required. But still, after doing all that, you should still make an effort to save at least 20% of your annual income. This is a piece I would request to all the teenagers, youngsters, The most of the people watching my videos are between 25 to 35 years of age. I would like to request you all to please start saving. Please, saving doesn't require you to have lakhs of rupees. It can be done with a minimum 500 rupees also in a month, right? Nowadays, even the government is coming up with lots of initiatives. The SEBI has launched initiative in mutual fund where you can also invest with a rupees 100 in a month. So it's not a big amount. 100 is like something you go out, maybe a one coffee or a couple of teas will cost you like 100 rupees. So that much of money I'm only requesting you, but please start saving. Okay. When I talk to the youngsters to the interview, they're like, no, I haven't done any saving. I don't have any mutual fund SIP going on. I don't have any investment on my name. So, but they have been earning from like 4, 5 years. They have iPhones, ironically, but they don't have any investment. So that's a thing I want to request all of you. Okay. So understand the rule of 50, 30, and 20. 50 is for your needs, which you cannot avoid. 30% is for your wants, which you should have it. And you should. If you're not doing that, please do that. Maybe not 30, but at least 20, 10, whatever. You should have something for your wants also. And savings is must to have. Okay. So next, we'll move on to the savings and investment. Okay. So savings, what we may discussed before, 20% of your money should go for savings. So in savings also, we have certain different levels of savings or investments. What I expect all of you to do it, right? So if you ask me, like saving, does it mean putting your money into a bank account? I would say no. Does it mean to withdraw that money and keep it in your home locker? No. Does it mean to put all your money into a FD or an RD or even all your money into a mutual funds? The answer is no. So nothing is saving. What I mentioned over here. The saving is the right saving is to diversify your investment. Even if you have 100 rupees, you try to diversify that into multiple, other say, investment options. There are lot many investment options. I'll give you a brief. So this is a slide. We'll talk about the emergency funds later. Let's talk about the different types of investments. So how you can save. The saving is not only about keeping your money at home or a bank or a FD. It's also about investing into a equity, investing into a government bond, investing into a real estate. Okay, that's all investment. So there are like multiple types of investment. If you have, let's say, 10,000 rupees to invest in a month, I would suggest keep some portion of it in your bank, maybe 1,000 rupees. Just a hypothetical example, 110 rupees of saving. Maybe keep another 1,000 rupees in an FD. 2,000, 3,000 rupees, you should keep it in your mutual funds as an SIP. Another 2,000 rupees, you should also try and invest into stocks if you can do it. Maybe if you are new to stock market, don't try your luck on stock market directly. But I'm just telling you different sorts of investment options available in the market. Okay, invest into a debt funds that will give you the safer option. It's comparatively better than the fixed deposit in many sense. Okay. So all those who have been having less than 2.5 lakh as an annual income, and they don't have to pay any tax, right? In that case, even if you're investing into a debt fund, it's tax free for you because the debt funds returns are taxed at the slab rate. And if you don't have any slab rate as an taxable salary, obviously the tax would be zero for you. So debt funds are also good for you. Okay. So equity mutual funds, there are a lot many save investment options. Just don't stick to it. Invest into whatever ways you feel like, but just don't also put all your money into one single investment option. Okay, that's a problem. I have lot many videos in my channel who talks about different sort of savings and tax savings. Please, I have link all those videos in this description over here. Go to those videos; they will have in detailed discussion about how you can invest your money. Another point, important point in terms of saving. So while most of us still may be able to do some investments or uh, do the budgeting right, but what if we're not keeping the emergency funds? So what is emergency funds? Emergency fund is like a savings only, but it's meant for a special purpose, right? So as an emergency, the words define. So you keep certain amount of funds in probably your saving account or in something like an in recurring deposit or in fixed deposit or maybe a liquid mutual fund, which you can withdraw it whenever there's an certain emergency. Okay. So emergency funds generally people keep it preferable to keep it any at least 3 months of your and 3 months of your monthly income. Okay. So if you're earning let's say 10,000 rupees a month, at least keep 30,000 rupees in your saving somewhere which you can withdraw it whenever there's a time for you to, or if there's any emergency to do certain things. Okay. So first of all, decide. So how will you decide it? You will decide it based on the expenses you have. Okay. So define how much you want to keep it. 3 months, 6 months, 9 months, 12 months. Best case, if you do it for 9 months, it's good enough. Not required more than nine. But at least you should have it for 3 months. Okay. So 3 months of, let's say you defined a period, 3 months, 6 months. It also depends upon the nature of your job. Okay. Like what are certain job roles, maybe those who are in uh risky domain, maybe an airline to talk about in India at least. That's what the history says. Airline, or maybe if you are in a company which is very seasonal, maybe a farming, or maybe a company which is more to do with the AI, which is little unpredictable right now. If you are in any of these kind of roles which where you don't have a guarantee of an employment, in that case you should try to keep a longer emergency fund corpus. If you are in a job which is very common and like in insurance company, banking, mutual fund, or if you're working in some marketing company, in those kind of roles, like or any, any factory and all that, in those kind of roles generally have a job stability. Okay, because there are ample opportunities even if you move out from one company. So in that case, you still can go with minimum 3 months. Okay, so it largely depends upon the kind of a job, the kind of employment you have, and basis on opportunity, basis on employment and other factors, you should decide of how much emergency fund you want to keep. Okay. So once you decided about the tenure, the next step is to determine how much is your monthly expense, which you cannot live without. Okay. So as I mentioned earlier, the need, want, and savings. So obviously you can live without your wants. You can live without going to a movie. You can live without having a food outside, right? You cannot live without having basics at home. So that should be a part of your calculation. And certain investments, like for example, if you have a any loan going on, probably a home loan going on, right? So that EMI also you cannot skip. So that also you need to include in your monthly expenses as a fixed expenses. That money, some of that money multiplied by the total month of corpus which you have decided in the first step, that should be your emergency corpus requirement. So let's say we have a monthly bare minimum essential expenses of 50,000, and you decided you want to keep it for the period of 6 months. So 50,000 into 6 months, 3 lakh rupees is what you need as a emergency fund purpose. Now you know that this is the amount which you require for your monthly expenses. Probably this amount will not going to change so frequently unless there's an event happen in your family. Probably you might get married. You may have a baby now, or maybe could buy a new house, leading to a new add into liabilities and all that. Unless there's certain major event happen in your family or in your life, this amount will more or less continue to remain same. Okay, at least for a year. So that amount you decided. Now the next step is to start accumulating money to reach that point. Okay. So the 3 lakh is what you need. Now you know that 30,000 rupees or 50,000 rupees is what you need as expense. Maybe let's say you're earning 80,000 rupees. So you should try and allocate some funds from your investments on a monthly basis towards your emergency fund corpus. If you can create that corpus in one go, that's the best thing to do it, but mostly people will not be able to do it so because that requires a 3 months, 6 months of at least worth of expenses, which would be good enough, at least 60-70% of your expenses of your annual income. Oh, sorry, monthly income. So what you can do it, you can put at the beginning until you achieve that amount of purpose, you should put some amount of your savings, like 20% is what you should invest. Maybe 10% of that saving should go into the emergency fund purpose. Create an SIP, or if you don't want to invest in mutual funds, create an recurring deposit. Put that of money into your investment directly being transferred so that it accumulate over a time. Maybe not immediately, but at least after 6 months, 7 months, 9 months, you should be able to reach that emergency fund purpose. So once you reach that, for the first time you may have a problem because it may take you longer than required to reach that level of purpose. But once you have achieved that purpose, then your expenses will not going to increase so drastically. Even let's say your expenses increase from 50,000 to 60,000, you will only need like 30,000 rupees or maybe 60,000 rupees to add up to that level again, to maybe increase that emergency purpose to your required expenses. So that 60,000 rupees will not take you like another 6 months. It will may just take you like 2, 3 more months to reach that level. So start building up, make it a automated contribution so that you don't have to, the investment should not depend upon your action to do it. It should directly debit from your account as and when the salary hits, and it should add up to your corpus. Okay. Fourth important aspect of emergency fund, while you keep it separate, like you keep it, maybe if you're having five investments in one particular account, keep this investment separately so that you don't um, have that very too much of frequent usage with that information. Okay, keep it like in mutual fund, separate company, or maybe a separate folio, something like that, which you don't access it too frequently. So that if you see it daily, you may feel like okay, this amount has grown so much, let me withdraw it. So to keep away that sort of an anxiety, keep it in a separate account, a separate page, but make it accessible. Keep it accessible also. It will not be like you forget that bank account password, you forget that folio number, you don't remember the user ID password, and then you find it difficult whenever you need that money. Okay. So while you keep it separate, the idea is to keep it accessible also. Okay. And stick to the purpose. That's very important. So emergency should not be the definition of emergency should not be changed according to your need, according to your want or maybe your desire. Okay. Whatever the purpose you decided that maybe in my life, these are the five emergencies I could come across. Okay. Maybe a medical emergency, maybe an emergency where you don't have a salary, maybe a loss of job. Only in certain emergencies you should be able to withdraw that money, not in any sort of requirement. Not like maybe someone asks you for a money, hey boss, give me some 10,000 rupees, and like you have been very generous. You pull out money from emergency purpose and you give it to your uh, the person. See, it's good to help someone, but not to break your emergency fund and then help it. Because in that case, if what if after 2 months, 3 months, you got in some requirement, so where you will get the money from? So help, maybe try to find other ways to help. Use your normal savings, normal income to help that. Do not break your investment. Do not break your emergency fund corpus at least. Maybe break your other investment if it's very generous, yeah, generous requirement, maybe a very genuine requirement of that friends or colleagues or whatever. Use your other source of revenues, use other source of investment, but not your emergency fund corpus. Okay. So why it will help you? Because if you have an adequate emergency fund, you can handle all your emergencies like loss of job, medical bills without having to rely on additional debt. Because if your debt comes along with interest. So while you pay for a debt, you also have to pay for an interest which comes along with it. And whenever the debt comes at a time of need, it will not come with a interest rate you want. It will come with the interest rate the opposite person wants. Okay. So remember that. If you want that peace of mind, if you want that financial stability, make sure you maintain your emergency fund. Okay. Good. Moving into next, we already gone through this. Just two more important points before I move to a next point. Don't forget to consider your risk tolerance and your financial goal before choosing investment options. If you choose your investment option as an equity, make sure equity comes with a risk. Okay. You may invest in like say 2, 3, 5, 10 equity companies. You cannot invest in thousands of companies together or hundreds of companies together. So that's a risk you're carrying. Okay. uh, if you're investing in mutual funds can also be too risky. So make sure you go through your profile, your appetite, how much risk you can take. If you're a person who cannot handle any loss of money, any loss of principal, even in a short term, please don't invest in mutual funds. Invest in a debt mutual funds. That's safer for you. Okay, but if you are in early age, maybe less than 45, 50 years, you can take some amount of risk. Okay, but you have to think long term. In that case, invest in some mutual funds, invest in some debt, also try to invest in some uh, the fixed deposits also that will keep you little more liquidity in terms of when you can withdraw it. Okay, so mutual funds are also easy to withdraw. In 2 3 days you get the money from. Okay, And also diversify your investment. Just don't invest in one or two investment options. There are tons of investment options available in the market. Please go through them, understand, consult your financial advisor, consult your chartered accountant if you have, consult your RIS, and then take a call where to invest. Okay. Okay. Moving to next, reducing debt, or we can say a debt management. So what is debt? Debt means a loan, uh, a credit which you have taken it from someone. Okay. A loan could be maybe your personal loan, maybe a home loan, maybe a loan from your family, colleagues, family, or from your company also you may take a loan. So all this is called debt. Okay. A debt management refers to a strategic and practices aimed at effectively handling and reducing one's financial obligation. So why it is important to keep our debt under check is that because if you leave your debt under left debt unchecked, then what will happen? You will never be able to know that how much money you have taken it from your friends and families, or maybe from the regulated institutions, and you how much you want to pay it back. Maybe getting one loan to repay another loan, but what is happening in all that cycle? You're ending up paying lots of interest. Okay, so to avoid that, its first step is to be aware about that. So whenever you are taking a loan, or if you already have few loans on your head, maybe there won't be any collaterals for it. You may not have given any property in exchange of it, or a jewelry, or a gold, and against that, but you still have a loan. It's very important first to track how much loan you have it from your transaction. Okay. So the first step is to organize all your debts together. And then it comes the next step where you have to plan how to repay the borrowed money. Okay. So keep a track of it. That's the first thing. So how one should approach towards debt. So first of all, as I said earlier, it's very important first of all for you to know how much is your total debt. So assessment of debt comes the first step. What you need to do, you need to take a pen and paper, list down all your debts. Okay. It could be your credit card debt for a month. It could be your personal loan debt. It could be a maybe a smallest of smallest debt from your friends and colleagues. Okay. It could be any other sort of loan, maybe a loan on securities, exchange, whatever you have got for. So the idea is to list down all your debts. So make it an Excel file or a whatever pen paper best works for you. List down, put the serial number, put the header name, and then put the debt type, loan, home loan, put the bank name from which you have taken a loan. Maybe if possible, put the date of borrowing when you have borrowed that amount and mention the amount, how much is left, how much is paid, and all that. So like this, make it Excel file, put track all your debts over there, and then look at the total. How much of total money you have to pay to repay all your debts. Okay. Mm. Look at for two important information. One, how much you are already paying month on month to repay those debts. Okay, because I believe some of it would be structured debt, like in loans and all, which you might have taken from the companies. Okay, and some of it could be loans from your friends and colleagues, which won't be structured in when it comes to a repayment, but it comes to you with a cost. Okay, so these two things you need to do it first. So now let's say you have tracked on everything, that 30,000 rupees you have to pay per month in a form of structured debt. Okay. And the total debt may be, let's say, it's 30 lakh rupees because it's a home loan. So it's a 30 lakh rupees you have a total debt. And 30,000 you're paying every month. Okay. Now, after that, the next step comes to budgeting. Budgeting, you have done it first step also. In that budgeting, when you put down your needs, this is the amount. This is the 30,000 rupees which you are paying into your institutionals or your friends and family as part of a repayment. That money you should put it under your needs because you cannot live without this. You cannot leave your uh, people who are asking for money, people whom you're supposed to pay money unpaid. You have to pay them every month. You have to pay them as per the commitment. Okay. Otherwise, if you don't pay them, that's another again different sort of problem you will get into it. Okay, so you already have budgeted out for that money. What you also need to do, since you have to, the idea is to from the debt management is to come out of debt. you need to also plan how soon you can repay all the debt. Okay. There have been lots of videos on how you can reduce your home loan liability. Even I have made one video on home loan interest rate, how to reduce the home loan interest rate. Please do check out that. Okay. There are also videos how you can repay your loan in a simple installment. So, like this, refer to all those videos, make it a plan. Let's say if you have a home loan of 30 years, you don't need to wait for 30 years to pay your entire home loan. If you do it smartly, the mathematics says even if you pay one installment extra every year for first 10 years, you'll be able to reduce your home loan sharply by 7, 8 years. So that's how the debt works. That's how the prepayment works. And even in the home loan, you don't have to pay extra. Okay. I mean to say that you don't have to pay too much extra to get your home loan tenure reduced. It's a small amount. It's a one additional EMI. If you pay every year, it will reduce your home loan sharply. So look at all those uh, tricks and hacks to repay your debt in quickly. If you have a debt from your friends and family for which you don't have any commitment or it's not really structured for a repayment, consider an option where you pull out small amount of money every month to repay them. Let's say you have a 10,000 rupees due to your friend. 10,000 rupees paying in one shot may be a little problematic. Okay. So maybe you can prefer talk to your friend, ask them if you can pay 1,000 rupees per month or maybe more than that to pay out that entire amount. It might be possible that your friend may not be eager to get that money in the bits and pieces because the friend will feel like I paid him 10,000 rupees, I'm getting like 1,000 rupees every month. I don't know where it went from. Okay. Many people will have that problem. Personally, I have also have that problem. If I'll give someone 10,000 rupees and that person give me like 1,000 rupees and 10 different installments, I like what happened to my money, where it's all gone. You see, I won't feel that 1,000 rupees coming in every month. Talk to your friend if that person is okay to accept that. Well, good for you. But if not, then what you can do? Then you should put that 1,000 rupees into a recurring deposit, or maybe you can start a very safe uh, mutual fund, probably a debt mutual fund or an arbitrage mutual fund, where you can put that 1,000 rupees per month. At the end of 10 months, you can withdraw that money because it's a medium term, short term goal. You can withdraw the 10,000 rupees. You can pay off your friend. There'll be magic happen for you after 10 months. That 1,000 rupees which you have been depositing in that account or in that mutual fund would have become like 11,000 rupees. You will have you will have a surplus of 1,000 rupees. Okay. I don't know if your friend will wait for that 10 months or not, but I'm telling you the ways and means to do it. If you can wait for some time, instead of taking 1,000 rupees per month, if that friend is okay to wait for maybe 5 months, 6 months, plan it out. Okay. Increase your SIP amount if you have to do it earlier. Okay. But there are ways to do that. What I'm trying to say is that if you have a loan, unstructured loan, where you don't have a commitment, but there's an obligation for you to repay that money, please make it a structured start investing some amount of money from your account on a regular basis so that you can finally pay off that person earliest. Okay, that's the point. Now, systematically, if I talk about, there are two ways to look at the debt repayment. Okay, one is called the snowball method. So in a snowball method, what we generally target, so let's say you have five different debts. One is your home loan, which is like 30 lakh rupees. Another is your maybe a personal loan of 1 lakh rupees. And then there are three small loans from your friends and colleagues. Maybe one is 1,000 rupees, another 10,000 rupees, another 30,000 rupees. Okay. Now, in snowball, what we look at the smallest of debt. The smallest of debt is of that person who has like just 1,000 rupees. Okay. So what you can do, you can start from paying of that 1,000 rupees. 1,000 easy amount out of that overall debt you have. Just pay off that person. Out of 5%, 1% done. You're less. You have now less burden of four people only. Okay. Similarly, next time you have some extra money, pay off to the second person who is just having 10,000 rupees. Sorted. Number of people you are supposed to pay reduced from five to three. Mentally, it will help you. Okay. It will get you that momentum. If you won't start, see, all of a sudden, if you start by the first party who is having 30 lakh rupees, it will take lots of time. You don't have that money to pay off that person immediately. But obviously, you have money to pay that 1,000 rupees. You have that money to pay that person who have just 10,000 rupees. So that will give you some happiness. That will give you some peace of mind that okay, now I'm not have to answer five different people. I have to only pay these two of my bigger debts who are like more structured. I am free with this unstructured payments. I paid off my friends. Friends also feel happy. Yeah, see, boss has paid all the payments to me. My friend has paid all the given it all the back money which I'm supposed to get. Okay, so we learn trust. We learn respect. So try this method. If you don't have that, if you to get that momentum, it's try the method of snowballs. Okay, the another method is avalanche method. So avalanche method generally works out in a situation where you have multiple debts, but more or less all the debts are like almost of the same amount. Maybe 10, 15, 20% here and there. Okay. It's there's not too much of variance in the amount of debt you have taken. Maybe one institutional you have like 1 lakh rupees, another institutional you have like 2 lakh rupees, another 1 lakh 50,000 rupees. So in that case, what you should try, and if you have that much of appetite to pay off, you can prioritize paying off that person who have the highest amount of debt. Okay, because that will give you a lot of peace of mind. So let's say you have three different home loans. You have due to bad planning, due to not maybe before watching this video, if we have taken too many loans, you can think of from playing. You can think of from paying the person who have the highest debt. Okay, so in that case, so these methods will definitely help you. Try the snowball method. That's the most effective method if you have different varies the amount of debt on your head. And also you can do if you have very small debts, you can also prefer to take one big loan and you can pay off all your smaller debts. So it's basically what I mean to say a debts consolidation. Maybe you can take a one loan and you can pay off all your maybe 10 different sort of loans you have taken, so that your loan becomes structured, your debt becomes structured, and you know that you have to only pay like 10,000 rupees per month to one single bank, and you are free to it. Okay, so that's a debt consolidation. I won't recommend you as much as I recommend you a snowball method. That's more effective way to pay off your debts. Okay. Well, let's moving on to next topic. So this is also a very important topic, generally being missed out, not being considered, even by the people who have started investment. They also generally overlook this retirement planning. Okay. So retirement planning, you must have seen these three happy couples. Okay, dancing, cheering, exercising. Okay, going on a vacation, taking a selfie, and the couple sitting on piles of money. So this is what the retirement planning is, man. If you're able to live happily even after your work life, that means that you have done the perfect planning for your retirement. Okay. So this is a to define in words, retirement planning is a process of preparing financially and strategically for a comfortable and secure life after you stop working, which is like 60 years of age. It involves setting goals, estimating expenses, and building resources to sustain your lifestyle. Okay, obviously, if you have been living a lifestyle of driving a four wheeler, going out on vacation once in a year, you will high and likely that you will stop doing that at that time. Maybe you want to do it double. You want to go more on a long drive. Maybe instead of once in a year, you may want to go twice in a year. So all that will happen. So that's why the retirement planning is important. Okay. In this video, I'll give you the very overview of what you can do to plan your retirement. Okay. Well, not talking in detail because that will make this video too long. Okay. So how you can do it, I'll give you a brief. So first of all, what you should do, you should estimate your annual post-retirement expenses. Okay. Let's say if you're a 40 years old now, okay, and 60 years you want to retire. I'm just considering a normal retirement age. Okay. So consider what is your annual expenses now. Okay, that you foresee will continue even after your retirement. Maybe your health expenses will continue, your groceries will continue, your travel will continue, your another expenses, entertainment and all will continue. What will not continue is your children's education will not continue, right? At some point of time, they will going to get stopped. Maybe your if your home loan is going on, that may not going to continue after 60 years. Maybe other sort of loans which you have taken now, you may not have those loans later in the future. So think of the expenses which will continue to be there in the future and then calculate a higher number. So there are lots of tools available. I don't have this tool handy, but there are tools available in the market. Use that tool to calculate your fire number. I think if you Google and if you simply type fire, it will give you resources how you can calculate the fire number. So put that money, put that amount which you come across, and then considering an inflation, it will calculate a fire value for you. Okay, so that much of the money would you will require at the time of retirement. Okay, so that will help. That will reach you to the step number two, where you will determine your retirement corpus. Okay, factor in inflation. Now, once you have defined that amount which is required, you need to also factor in the inflation required. So inflation, general inflation, if I talk about, is around 4 to 5%. But in certain cases, this may not be an inflation you may face. Okay, if you happen to be a couple, if you happen to be a family who also aspire to maybe improve your lifestyle, in that case, the inflation may be much more higher. Okay, if you're a person who having a toned milk now, which will be costing around 27, 28 rupees half a liter. Tomorrow you don't want to, maybe the person will not going to continue with having the same quality of milk. You may want to upgrade yourself to a A2 cow milk, which will be like 40 rupees half a liter. So in that case, inflation is not 4-5% for you. It's as good as like almost 70% for you. Okay, if you make that switch now immediately. So considering the amount, considering the lifestyle you may want to choose, you want to live, the inflation may vary. So plug in that inflation number. I think for a safer side, use at least use 7 to 8% inflation on an overall basis. Because in certain aspects, you may have a inflation of like 5%, 10%, 20%. On an average, it will come out to be, let's say, 7-8%. Okay. So always consider 2% extra what is there in the common, because the common usual inflation covers every aspect of the basics, which may not be fair for you for your lifestyle. So accordingly, put the inflation. Then also you need to consider your investment return. See, now if you're considering inflation of 7% and you are investing then into a FD will also give you returns of 7%. So there's no excess. You're not earning anything in that case. You're just beating the inflation. So also you need to ensure that while you plan for retirement, you plan in such a way so that you can keep some amount of money into your equity, some amount of money in your debt, some amount maybe you're in FD, in your bank account, or in other means. Okay. So diversify. I would suggest, I'm no expert to tell you how much money you can put in all these buckets, but as a general guide, I will tell you that consult your financial advisor, consult your RIA, CFAs. All these are certified financial planners, assistants who can guide you very well up in this aspect of time. Okay, try to invest in multiple areas, multiple investment options, diversify investment, and then try to keep your returns at least 3 to 4% extra of what you are expecting an inflation to be. Okay, that will help you to keep your corpus longer. And then the mistake which many of us are doing it, even the people who are investing, already investing, start early and leverage compounding. That's very important, because if you don't start early, if you think that all those people who have interviewed, and if they know me by my face, please understand, you have to start early. Do not wait for 10 years of experience and then you, okay, finally, now it's just time, when you see your friends and colleagues earning lakhs of rupees, having tons of money in their saving investment, and then you realize, okay, I have missed out my train. It's too late for us. So you are in the right age. You are in that age where you can actually invest something. Okay. So start early, as soon as early as possible. I think people who joined financial companies have been little more lucky because they get to feel that importance of savings early. Okay, compared to people who join any other industry. This is my hunch, not something I'd have it on numbers. I can say that, but I feel they will have a better sense of investments and savings. Okay, those are the ones that in this background. So please start early. Even if you can start with a 500 rupees sip per month, it's still some amount of money you're saving. So not be enough for you, but at least you will get that habit. Okay, so start early. So that's about retirement. Now coming to the another important point. Probably this is the last topic before the conclusion of the insurance. So insurance, what's the role of insurance in financial planning? See, understand. See, insurance is essential. It's very essential to While savings and investments are will take care of your future, insurance is also a way which will help you to take care of your future. Okay, for your future expenses. So basic, there are three types of insurance: life, health, and property. And I say property, it doesn't only mean the real estate property. It also means your car insurance, your health bike insurance, your maybe if you have bought some very expensive gadgets and insurance on them, uh, your property insurance, fire, flood, and all that, shop insurance, so travel insurance. So that all the insurance I mean. Okay. So life is life, critical life. Okay. If you have been earning member of your family, and if you have a dependent, try to have at least 25x of your annual income as an insurance. Okay. So if you're earning 1 lakh rupees in a year, try to have at least 25 lakh rupees of sum assured. If you have annual income of rupees 1 crore, try to have an annual uh, life insurance of 25 crores. So that depends. That also depends at what stage of your life you are. I'm talking about the stage at the very early, okay, and then you want to secure your life. In that case, I'm saying. So life insurance is very critical, very must. Please be mindful. Okay, have enough insurance, have enough uh, insurance at your side so that it can keep care of your family members even if you're not there around. Okay. Second important insurance is your health. Health is a wealth. Don't miss out on this. Don't be greedy to put that 30,000 rupees in annually as your insurance premium. Don't think like, okay, I paid 1 lakh rupees of premium in 5 years and got nothing in return. That's a good thing. Pray that you should never be able to use your insurance in your life. Okay. Pray this money to be like gone forever because that's the best thing you can pray for. Okay. Even for the life insurance, pray the same thing that you should never be able to use this life insurance. Some people I've seen, man, especially in the families, uh, the families I've seen, they pay like for 10 family members, they end up paying like 70, 80,000 rupees in a year, and then they crib. यार महीने के साल के 80,000 जा रहे हैं, बर्बाद जा रहे हैं, कुछ काम नहीं आ रहे हैं. अच्छी बात है. When I used to tell them it's a good thing, na, they are not able to use this money. यूज करना मतलब someone need to go into that pain of hospitalization, medical examination, medicine, and all that stuff. And what if the disease would have been something dangerous? So pray, it's good thing. I think you should tell your family, tell your family father, tell your family heads. Don't to worry about this health insurance premium. If it is going, if no one is getting sick, if you're not able to use this money, it's the best thing to have it. Okay. So please don't crib about paying a health insurance premium. Pay it. If you're not using it, that's the best thing. Last is the property insurance, car, the bike, the gadgets, and all that. It's a good thing to secure them, okay? Because what if these are non-living things, and anything can go wrong with these things? There's no guarantee as such, okay? So in a car, always try to have the third-party insurance. That's most important, okay? In this way, you're not even securing your vehicle; they also the third person's vehicle in that case. So have these insurance. These are very very must to have. Also try to secure your expensive gadgets. Like if you buy an iPhone of 1.5 lakh rupees, just don't shy away from paying another 5 6,000 rupees to get the insurance. Okay, that 5,000 rupees will save you 1.5 lakh rupees of device if something goes wrong out of an accident, out of something which should not have been happened. Okay, so please do that. Insurance is critical and they are must. Finally, the end slide. Okay, and this slide I want to, this is more of your, more for the benefit of your family. Okay, while you have that leverage, you have that to go through the video and then take that lesson, you may be having enough learnings in your schools and colleges, but that learning need to come as early as possible. Okay, I think we have been the generations who didn't had that liberty to have these much of information available at a and in our fingertips. We even the mobiles ones are not there when we were there in our age. And forget about schools covering these topics. Okay, so but what you can do in your generation, at least to your own children, you can start giving these knowledges to your children as early as possible. Okay, make them understand what is finance, make them understand what is savings. Start from a very very basic. Give them a money bank, bring them a money bank, cute little money bank, whatever design character they like. Give them money bank. Start, give them a habit of saving something. If you're giving them some pocket money, make sure they put some amount of pocket money into their savings also. Okay, that would be the first savings. That would be the first lesson of savings. They will understand what the saving means. Okay. Uh, Also, if you can do it, you can open the bank account in their name. They will feel very overwhelming if seeing their account, seeing their bank account. Okay, show them how the bank functions. Take them to a bank. Whenever you're going for a bank for a purpose, whenever going to ATM, take them along with you. Okay, show them how the ATM works. Show them how the bank works. Show them what the checkbook is. So all these things are very exciting for them. You understand that? When I have daughters, I take them along with me to the banks, to ATMs, wherever it's possible, I can take them. Okay. So please do that. Early you start, the better for your kids, and better they will learn, and hopefully they'll get more independent than you have got so far. Okay, that's a must to have. So at the end, conclusion. So in this presentation, we discuss about lot many aspects. Try to keep it short. Individual section by section. There's some videos already available in my channel. Please go through them. Okay. If you think that there's certain aspect I need to put more emphasis on, please comment. I'll definitely try to make a detailed video on that. Okay. But for now, that's it. Thank you for joining me. Thank you for your time. Stay blessed. Stay happy.